A client of mine was fined thousands of dollars by their HOA board because they saw upgraded flooring in a Zillow listing photo. Work that they never approved. And to make things worse, right before closing, the condo lost its Fannie Mae approval, which sent the buyer scrambling, having to take a non-QM loan just to close the deal. You should never buy a condo unless you know exactly what you're getting into. Condo ownership sounds affordable until HOA dues jump, special assessments hit, and the board ends up fining you for installing flooring in your home. Would you risk buying in a community that could legally fine you for upgrading your own home? Let me know in the comments. Before we dive into the meat of today's video, I want to be very, very clear. I actually live in a home that's in an HOA. So a lot of the things that we're going to talk about today that you should watch out for are things that I see firsthand. I've actually been a member on an HOA board having to deal with some of the issues that we're going to talk about today. Now, not all HOAs are created equal, but it's very, very important to understand the nuances of HOAs, what goes into condos, what you need to pay attention to so that you don't end up making a decision that you regret. Now, one of the very important things I think you should understand as somebody considering buying a condo is that HOA fees are not fixed costs. The dues tend to rise with inflation. Also, if insurance goes up, your HOA dues are likely going to go up to cover that cost. On top of that, if there's any deferred maintenance in the community or the vendors that you're using are starting to charge more, guess what? Your HOA fees have to go up in order to cover those rising costs. And what I see is a lot of first-time home buyers move towards condos because they're more affordable, because you can buy them at a lesser price point. So what ends up happening is it ends up being a starter home for a lot of people. And in doing so, many people push their budget. They max out their qualifying ratios so that they can end up buying more home. And while your mortgage rate is fixed because you're likely getting a 30-year fixed mortgage when you're buying the home, the reality is most people don't think about HOA fees. They think about maybe their property taxes going up annually, but they never really consider those increases in the HOA dues, which in some cases can have a huge impact. In Castle Rock, Colorado, HOA dues on one particular complex went from $300 a month to over $820 a month. And while a condo may seem affordable when you initially buy it, in some cases it can become extremely unaffordable if and when these HOA dues rise. And in some cases you have to deal with special assessments, which is the next thing I want to talk about. Special assessments are one of those things that can actually wreck your budget. Now, if you're watching this going, okay, well, what is a special assessment? How is that different from HOA dues? Well, your HOA dues are typically paid monthly to cover what's allocated in a budget, generally over a 1-year period of time. So what happens with a condo is at the end of each year, the HOA board creates a budget for the following year, and they take into consideration all of the things that they're paying. In some cases, maybe you have pool maintenance and you have common area maintenance and you have different vendors that need to be paid on a weekly or monthly basis. So all of that is thrown into the budget. And then on top of that, you have reserves that you have to build in order to replace and cover things that may break over time. So all of this is taken into account, and then they take the number of units, they divide the cost, and that's essentially how they come up with your monthly HOA fees. So over time, as maybe the landscaping budget goes up because their cost actually goes up, they pass that along to the HOA. Well, now the HOA has to pay more for that. Instead of eating that cost, what they do is they pass it along to the homeowner. So over time, HOA dues are going to rise because of inflation, because things are getting more expensive. But the biggest difference in that in a special assessment is special assessments come when there's not enough money in the actual reserve budget to cover any costs that need to be taken care of at that time. So in the case that reserves are short, an HOA board can issue a direct charge to homeowners in order to cover whatever cost it is. So in the case that we talk about the Surfside collapse in Miami a couple of years ago, that led to the state of Florida doing additional inspections on all of these condo associations to bring them up to code because many of those buildings weren't up to today's standards. So what a lot of HOAs realized is that there was a lot of work needed in order to bring these condos up to meet those guidelines. And so what they had to do, because they didn't have the money in their reserves, is they had to issue special assessments to each unit in order to cover these costs. And in some cases, it was over $100,000, which led many of these owners out there to have to sell the units because they didn't have that money in order to pay that assessment. And unfortunately, when it comes to special assessments, there's not really a way around it. What happens is it's typically voted on by the board And if the board approves it, then that gets passed along. But even with that said, understand that the board members also have to pay that fee. So it's not that the board gets exempt from this. Everybody that owns a unit in that community has to pay a fee. And if that weren't enough, here in California, we now have something called SB 326, which has been recognized as the balcony law, which now requires all HOAs to inspect elevated wooden structures like balconies, stairs, decks every 9 years. And here's the worst part. If repairs are needed and reserves are short, guess who foots the bill? Owners. And there are no exceptions. And because this law is so new, what we're seeing right now is a lot of special assessments in these communities, because now this is a law. It has to be done. And if you're someone buying one of these properties or selling one of these properties, well, in many cases, this has to be done before that property can actually close escrow. So as a real estate agent seeing a lot of different properties, I'm seeing special assessments in a lot of older communities right now, communities that haven't been taken care of. So that's why I believe if you're considering buying in a community that has an HOA like a condo, it's very, very important not only that you read the CC&Rs, but you also read the budget, you read the reserve study, you read the monthly board minutes of what the board has discussed over the last couple of meetings. Are they talking about increasing fines? Are they talking about special assessments? What is it that they're talking about, and how could it impact you as a potential owner in that community? Now, before we go any further, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. And if you want to stay updated on everything real estate and mortgage related, consider subscribing to the channel. Now, as a real estate agent and someone who owns a property in an HOA, I think it's really, really important to focus on the reserve funding levels. How much money is actually in reserves in case a community has to replace balconies, has to do work on balconies. Maybe they have to do roof repairs and they're responsible for the roofs. Do they actually have the money in the budget in order to cover that? And on top of that, how well funded is that community? Typically, most boards have an annual audit every single year. And as someone considering buying in that community, you should be able to get a copy of that audit where an independent third party has gone through the actual financials of that community to give their opinion on where they believe the reserves actually sit. And on top of that, they give their projections of whether or not they believe there could be special assessments in the future. Now, in addition to that, something I like to do is go back and look at the history of HOA dues, right? Where were they last year? Where were they the year before? Where were they 5 years? Now, if you just see small increases annually, that's pretty normal. A lot of times you might see the fee stay the same for a couple of years and then see an increase. That's also a really positive sign for an HOA board. But when you see big jumps every single year, then in my opinion, that's a red flag. That's a cause for concern. Now, when I think of that, there's one particular community in the city where I live that their HOA fee has gone up every single year for as long as I've been doing real estate. In fact, when they started, that HOA fee was probably $350 or so bucks. Right now, it's pushing $800. And based on my experience, it's probably not going down anytime soon. So if you're somebody considering buying in a community like that, just make sure you're allocating your finances accordingly, right? You're just planning for those increases annually. And in my experience, that's not what's typical, right? Typically speaking, you see these small increases to cover rising costs, and special assessments are typically rare. But going back to my client that I started the video with, the one that had the fines for putting the flooring in, it's very, very important that you read the HOA rules, because remember, HOA rules equal limited freedom, so to speak. Now, most of the time when you're doing renovations to a condo, to a house, whatever that's in an HOA, it typically applies to the exterior of the property, right? If you're painting it, if you're making modifications, you have to go by the architectural guidelines. You have to get those approved by the board. But typically speaking, once you're inside a condo or a home that's inside an HOA, at that point you usually don't need HOA approval. Now, there are some condos that I'm aware of where there's multiple floors. They're kind of like apartments, but you have a unit below, one in the middle, maybe one on top. And in those cases, they might limit the type of flooring that you can use in those properties, because if you put hardwood flooring in and you have somebody walking around, say, in high heels, it can actually impact that owner below you because of the noise. But in the case of my client, yes, his property was a condo, but it was really set up like a townhome because, the downstairs, the middle, the top was all his unit, right? Whereas the next unit beside him was another condo. It was basically an attached townhome, if you will. So he went in and made a modification to the flooring on the upper level. Now, understand, the bottom level and the middle level already had this LVP flooring on it, and he used the exact same flooring that the builder used. In fact, he got the manufacturer from the builder at the closing table so that he could put the exact same flooring on the third level. Well, we listed the property, and as you would imagine, it hit the MLS and it also hit Zillow, and we got a buyer and we got under contract. Well, as we got under contract, we went and got the HOA packet from the HOA. Well, part of that package was saying that my owner had HOA fines that needed to be paid, which he was completely unaware of. But after digging into it, what he realized was that the board had seen pictures online and noticed that he had changed the floor on the third level, never got approval for it because quite honestly, he didn't know that he needed to get approval for it because he wasn't impacting anyone below him. And these properties were just built just a couple of years ago, so they're built to today's code. But either way, the HOA board wouldn't buckle, so he had to go out and hire somebody to actually do a test to make sure that the flooring wasn't impacting the neighbor next door. They had to go in to the neighbor's house next door and set up sound equipment, and then they had to go set up sound equipment here. And it basically turned in this whole debacle, which ended up in resulting that nobody was impacted by this. They let it slide after my owner had spent thousands of dollars in dealing with this whole HOA, which not only held it up from closing, but during that same period of time, the condo association lost their approval through Fannie Mae, which meant the buyer had to go with a higher cost loan in order to close on that home. So the moral of the story here is make sure you're going through the HOA documents. You need to know what needs to be approved and what doesn't need to be approved so that you don't get to the closing table and get fined or get held up from closing, all because you skipped a simple step. Now, in this case, my owner wasn't trying to skip that step. They just didn't think they needed it. So please pay attention to the rules and regulations, the CC&Rs, everything that comes in that HOA package, because it could impact how you feel about that property after closing. Now, another issue I see in a lot of condos is the whole shared walls equals shared problems, right? In many older condos, you can hear what the neighbor is doing next door. You can hear them shut the cabinet doors. You can hear them running up and down the stairs of the unit in some cases. The thing to realize is that you just have less privacy, more noise when it comes to condos than you do with your typical single family home. So if I were somebody considering a condo, I would probably try to go for the top unit. I would also try to go for maybe an in unit where you only have one attached wall. In addition to that, I would pay attention to where those attached walls are. Are they attached to your bedroom, or maybe they're only attached to maybe the common areas of the property? Because if they're only the common areas, then it's probably not a big deal. But if it's attached to where you sleep, then that could be a bigger reason for concern. Now, one thing I mentioned earlier about the condo association losing Fannie Mae approval, this can create headaches, right? Typically speaking, with single family homes, they're never going to lose their approval with, say, Fannie Mae or Freddie Mac or any of these banks. Whereas condo associations, in order to be approved, they have to meet certain guidelines. They have to have certain insurance requirements. In some cases, the property might be FHA or VA approved, and they could lose that eligibility if they don't have the proper financing or they're not keeping up to date with repairs or insurance. Now, in many cases, this might not be a big deal, but just understand when you have limited financing options, it narrows your buyer pool, right? Less people can qualify for that type of financing if they have to go non-QM. And many people don't want to take a higher interest rate, right? Because that's going to impact their monthly payment. They're also going to qualify for less home. And if they go to resell it and that's not back on that approved list, that could impact their buyer pool as well. Now, in the past, this is something we really haven't had to deal with, but because of these rising costs and all of these special assessments we're seeing in like Florida, there's a lot of properties going through this delisting, if you will, being pulled from these lists because these complexes no longer meet the guidelines that the lender requires. Now, at the moment, if you're located in a state like Florida, you're seeing a lot more inventory because of the things that we mentioned earlier, right? Rising interest rates, rising insurance costs, rising HOA dues, special assessments in some cases. And the more properties you see on a market means you have more supply, right? And at the moment, there's less buyer demand for all of the things that we just mentioned, which means in some cases you can have slower appreciation with condos than you will with single family homes. Now, in a bustling market like we saw over the last 5 years, everything was selling quickly. Appreciation was going strong across the board. But as the market slows, financing options become more difficult. You're going to see it impact the condo world more so than the single family home. So if you are somebody considering buying a condo, just make sure you're thinking about all of the things that we talked about in today's video. Doesn't mean you should not own one. It just means you should not own one unless you've gone through all of those steps and said you're okay with owning one. Now remember, I live in a community with an HOA, and I love it because it keeps the community looking the same. I like the fact that my neighbor can't park an RV on his driveway or a boat on his driveway. He can't work on a car in his driveway. And with that said, there's some uniformity of the community. So So I do like that. Now, there are things I don't like about being in an HOA, but at the end of the day, I've been living in one for the last 14 years. So this isn't about avoiding condos. It's about protecting yourself from getting blindsided. Condos can absolutely work if you do the homework up front. But I have a question for you. What's the craziest thing you've ever seen an HOA do? Let me know in the comments. Now, after watching this, you're not sure if you want to own a condo or a home in an HOA, but you're wondering what types of properties you should stay away from? Do me a favor and check out this video here.